All right. Well, thank you. So, however, that's enough for announcements. Let's get into our content for the day. So, I am really excited today to talk about this topic. As I mentioned in the networking round earlier, I've been working with Dave for a really long time. I had red hair when we started working together, and Dave has always had some really fantastic perspectives on strategy and approaches to product strategy. Dave Haucke is the vice president of product at Hearsay Systems, and I'll let him tell us a little bit more about that as he comes on the screen here in just a second. I want to remind everybody as we're getting started with today's session on the art of market sizing that one of the things that we do is we have a community notes document. I'd love to ask everybody to jump over to productcoffee.com/notes. And as you hear insights and have thoughts that you'd like to share, or questions that come up, or perspectives or links you want to share that are related to the conversation, drop them in that document. Instead of taking notes for just yourself, if we do it as a community, then we all learn from each other's perspectives, and it's another way to connect and help each other grow. Productcoffee.com/notes, and jump into that document with us. And with that being said, and without any further ado, I would like to welcome to the camera my good friend, David Haucke. Welcome, Dave. How are you today?
I'm fantastic, Jason. Thank you very much. Good to be here.
I got to tell you, I'm a little bit, I love the mountains in the background. I'm a little disappointed about seeing skateboards.
All right. Well, we'll remedy that. I can certainly, kill the background. We can talk about what the skateboards are. So
yeah, there you go. There we go.
All right.
Love it. How are you?
I'm good. Yeah. So, Dave Haucke, Jason mentioned VP product management at Hearsay. This is my form of art. I'm for those of us who are recovering developers, I'm a recovering skateboarder from the 80s. One of the ways I've nursed that is to go back and collect all the skateboards I destroyed in my youth and instead hang them on the wall and appreciate, a pretty fine period of skate culture. So that's the background for you. And happy to appease you, Jason.
Thank you. So tell everybody a little bit about Hearsay Systems and what it is that you do at Hearsay.
Sure, absolutely. So Hearsay is, we've referred to it as a compliant customer engagement platform. We serve the financial services industry exclusively. So Holly, as you were talking earlier about, having to be responsive to regulations and shifts, we're always just one good SEC lawsuit or fine away from shifting the product strategy. But our focus is really on the distribution end. So sometimes you hear that referred to as distributed marketing. So we deal exclusively with the end, wealth advisors, insurance agents, asset managers, and that's who our software is built for. But key to that really though is the compliance element of it. And so as much as we have those end user personas that I just mentioned, we're obviously very much focused on compliance administrators and what their needs are and how we can help their teams be engaging in social media, text, and all that in a way that's not going to get them fined out of business.
Yep. Well, thanks for that. And so I don't want to take too much more time in the intro, but one of the things that I know you and I worked together at IBM when IBM acquired Silverpop, and one of the things that was really interesting about the space that we were in the MarTech space, is there was this thing called the Marketing Technology Landscape that Scott Brinker would put out every year. And the first year he put it out, there were like, I think 180 companies on it or something like that. And then the next year there were like 500. And now it's literally thousands of marketing technology companies in the MarTech stack. And evaluating them and understanding where they fit as competitors, as potential threats, was just a massive job. And you couldn't even really keep up with it. But as we were thinking about at IBM having to enter different spaces and take different approaches to the market, one of the things that we really needed to do was have a good feel for the financial threat, the resources of the companies that we were looking at. And you had a great approach to sizing, especially earlier stage companies and in these nascent markets that didn't have clear boundaries on them, to sizing not only competitors but also entire markets. And so when we were doing our market research series, I felt like it would be a really good time to share that with a broader audience and give away some of your secret sauce that makes you so powerful. So thanks for agreeing to do that. And I'm going to let you take it away for a minute and just kind of talk through your perspective on this topic. And then we'll come back for some Q&A.
All right, sounds great, Jason. Thank you, thank you. Yeah, so I mean, as Jason mentioned, this really took shape, and during my time at IBM. And look, I know we don't always get the opportunity as product managers to get involved in market sizing. A lot of times, we may be working in larger corporations where you have corporate strategy teams or business development teams, corporate development teams doing that work. But as for all the reasons that Jason outlined, it became a big part of how we did competitive intelligence, how we made decisions on product investments, and on the flip side, the not so fun side, also how we made decisions on product divestment decisions. And so we'll get into it a little bit here. This is what I would like to at least frame the conversation as. And again, with events like this, it's much better and more valuable if I spend as minimal time as possible talking at you, and we can get to start discussing. I've already seen some good chatter in the chat, so I'll frame up my approach and highlight what it is that, and why you should care, and talk very specifically about what I would actually do and how formulas that I use to size the market. And then to close it out, we'll just cover some fine print, so some assumptions and caveats to this approach. All right, so let's start with, what is this market sizing thing you speak of, right? And I'll intro each of these sections with a fun little quote. So, tell me, stop me if you've heard this tired refrain: we just need 1% of a $10 billion market, right? Because this is what we all aspire to as product managers. We only need $100 million to make the world a better place, right? And I've attributed this quote to the ghost of PM's past. I mean, the tech landscape is littered with the bodies of folks who thought that all they needed was a long tail business. All we need is 1%, right? I mean, I think we can all agree that that's probably not the right source of inspiration for us. But there is obviously merit to understanding what the size of your addressable market is and what we think we can actually achieve from it. So, but at any rate, so what are we talking about? On the left here, this is my definition. So market sizing is the act of identifying, defining, and measuring the value of a given business segment, where value is defined as the spend in market. We're going to talk a little bit about that last phrase there, spend in market, because there's different ways. And as you see here, there's kind of three different approaches that are pretty common. But sometimes when we're doing market sizing, we're talking about actual spend in market. In other words, this is the revenue that the software vendors are actually generating, versus, in some of the more top-down views, you see it's more about potential demand. Like, this is what the value of this market could be if it was conditioned properly and budgets were getting allocated and spent. So we'll spend a little more time on that. But yeah, I mean, at a high level, you've got kind of three different approaches: top down, bottom up, and comparative. The approach that I'm going to be talking about today is really a bottom up focus, highlighting some of the comments in the chat from Hector and Jim, right? As product managers, we actually need something a lot more specific in our view of the market. It doesn't do us any good to go, oh, well, we're participating in a $554 billion market and our revenue is 20 million. We're nothing, right? I mean, that's A, that's not motivating, and B, it's not helpful. So we'll focus on a bottom-up approach with some elements of comparative in there. For fun, I decided to also ask ChatGPT how it would define market sizing. And, not surprisingly, I was actually quite pleased with its response there. It highlighted some of the reasons why we do market sizing, and we're going to get into that as well. But, going back to the earlier conversation, things that are on our mind, certainly one of the things on my mind is generative AI and how we're going to bring that into the product in a way that's, again, not going to get our financial services customers in trouble. So, all right. So with that in mind, why should we care about this? What is the value to a product manager or strategist, and why we even go out and size markets? So next quote, we don't have any competitors, also from the ghost of PM's past. Right? One of the big benefits that we got from market sizing is really about better understanding our competitors directionally, where they're headed, what resources do they have, where are their weaknesses. But this quote here is really in reference to something that I heard a lot in doing these market sizing exercises, because you want to figure out who's in the market. So you talk to people, you do your research, and you're invariably coming against these emerging vendors who say, oh, we don't have any competitors. Well, I've got news for you. If you don't have any competitors, you don't actually have a market. So, unless you're, some behemoth getting investigated by the FTC for monopoly things, we all have competitors, and it's, valuable to do these sorts of exercises to better understand them. So why is this useful for PMs? Market sizing is a valuable tool that helps us in a number of ways. So better understanding the opportunity in play, making a distinction between what our total addressable market is, everything that we could go after versus our serviceable addressable market, the stuff that we can actually affect and focus on. And again, going back to Jim's comment, the idea here is to get to a specific of a view on that is meaningful and actionable for us. Again, harkening back to competition, know where our competition ranks and what that means to us. And we'll talk about some of the caveats there, right? Most markets are a mix of pure plays and platform vendors that, make it tough to understand exactly who's actually killing it versus who's not. And we'll talk about ways to sort through that. But obviously it helps us identify expansion opportunities. Yes, there is kind of an investment component to this of, we want to advocate for ideas, and then sometimes we're all coin operated. It's good to be able to sit in front of the board or in front of your executive team and say, this is the opportunity we could expand into. This is what it's worth if we go after it. We can also use it to gauge product health and performance, just another measure in our toolbox in terms of how our products are performing in market. But then most importantly here is really to see the potential beyond the present. We're also focused on customer requirements, a backlog that's a mile long, and just kind of the short-term views that we don't always get the opportunity to kind of pick our heads up and look beyond where we could take the portfolio. So on the right here, just some helpful versus not helpful examples. So one of the things that makes it tough with kind of a top-down approach, and you see this in some of the reports from the large consulting firms or market analyst firms, you'll see these big numbers thrown around, right? Total global market opportunity for customer engagement platforms will be 2.3 trillion by 2027. Who wants to buy now? Shut up, take my money, right? But that's not helpful for us as PMs, right? Okay, well, that's great. How are we defining customer engagement, and what are we stuffing into that number to get it so high? So not those sorts of things aren't going to be particularly useful for us. Yes, you can take top down and decompose it and try to get and triangulate more to something more usable. But really what we're looking at, sweet spot here, is to understand this, the second statement here, 12 vendors account for 80% of a $930 million market where we rank in the top 3 in market share. But that's information I can use. Those are insights that I can take forward and better understand my competition, help us make decisions on where to invest, where to divest, and really inform our product strategy. All right. So let's get into the substance here. How do I master the technique? So this is what we'll discuss the formula that I've used, kind of the approach, and some of the caveats and assumptions that I factor into that. Last quote So we can choose to design our product strategy based on the ingredients we have on hand, or we can decide on the market and value we want to create and source the ingredients accordingly. So this is me, something that I've expressed some version of over the years, but it's really channeling something that football head coach Bill Parcells said many years ago, where he said, if they want you to cook the dinner, at least they ought to let you shop for some of the groceries. So this is really a call to us as PMs to say, look, we have a voice in product strategy. We don't always get the opportunity to use it, but it won't harm anybody if we all walked away from here and said, hey, let's do a product sizing exercise or a market sizing exercise, bring that to our stakeholders and say, look, this is what we're leaving on the table because we're not fully investing in here, for example, right? So we do have a say in this. We do have the ability to impact product strategy. We can take advantage of this situation, because the alternative is that strategy just gets dictated by what we have in front of us. And that's not something we want, obviously. So how it's done. So to master this bottom-up technique, you'll need a few ingredients, a definition of the market space in question. So one of the things that we used very frequently was, things like magic quadrants and waves from Gartner and Forrester. They have their hype cycles and market scopes and those sorts of things as well. But then, of course, Lumascapes, and you heard Jason mention earlier, Scott Brinker's MarTech landscape. These are all great resources to at least give you a start on a market segment and who the key players are. As Jason mentioned, Brinker's MarTech landscape is super comprehensive, almost 12,000 vendors now. So you'll get probably more vendors than you need to actually size in this sort of exercise, but this is where you get a good frame of reference. It vets that how you see the landscape and the vendors participating in it is on target. This formula that I have here is really obviously based on, or focused on private companies. With public companies, we can make quick work of that by looking at the SEC filings. I'll come back to some caveats on that, of course, because an example would be Adobe. They're in many markets. And so how do we take their overall number for, say, like the experience management platform and determine how we attribute what is the portion that's dedicated towards data management platform. So we'll talk about that in a second, but really this is focused on private companies. So looking at employee headcount, obviously this is really the key, is trying to get as accurate a possible sense for what their headcount is. And for many years, not totally secret sauce, right, Jason? It's been LinkedIn. You can go to LinkedIn and get a really good directional idea of how many people are actually working for that company. I found things like Dun & Bradstreet and other databases like that to be wildly varying in what they report. And you all can vet that by going in and looking and seeing what they think your size of your company is. And certainly, there's not as accurate as I would like to be, but we've found generally that the LinkedIn employee headcount tends to be very, very close to reality. So then we're taking that, we're multiplying that by $200,000 per employee, so per FTE, which I'll show you a table in a minute there. 200,000 will vary depending on some different factors, but generally for most of the businesses that we were evaluating in these sizings, it was pretty much spot on. And as you can imagine, at our time at IBM, we had access to a lot of different data, including actual revenues for different businesses. So we were able to actually test this model against what we knew from our corporate development partners. And so this has been vetted, been tried and true, and amazingly, good, efficient businesses are running at about $200,000 of revenue per head. And then the last thing that we would always do here is we attribute 80% of that to software revenue. We would go back and forth a little bit about whether or not that was an important step, whether it's not to just report on total revenue or just focus on the software component. But generally speaking, most of the businesses we evaluated would have around 20% for things like maintenance and professional services. So you do that for every company in the market, total that up, and then you would add, you effectively kind of put a Pareto on this and say that 20% of those vendors account for 80% of the revenue. So we're going to just create this other category and say another 20% is for that. And then that gets all totaled up. And that's effectively where we go in terms of what we feel our market size is. And again, this is spend in market. So reporting on actual revenues. It's not an estimation on potential demand or what the market could be if conditioned properly. Right. So that gives us, again, good insights in terms of where our competitors are, what strengths they have. Are they growing or declining? That's the other aspect of this here is just, understanding, if we're going to maintain this sort of market sizing spreadsheet, we want to be able to factor in growth each year. And so, that's another area where you can look at, the reports, you can look at, the public companies that make up that market and see how they're growing. And that's where you apply some of that comparable approach in there. So you say, okay, well, roughly the market's growing at this amount. All right. I said a lot there. We're going to open up for discussion and questions here in just a minute, but just to close it off, just want to, call out the fine print. Right. So, the couple of things to note here, right? There's a correlation between company size and revenue per employee. And this is actually a great little chart that came out. I've attributed it here. There is a link behind that image there for the folks that want to check it out. I can actually pull that out and put it in the chat. But this is a very recent chart. And effectively what it's saying is the more we grow up as a business, the more efficient we become, which means we're going to generate more revenue per head. And so, again, I mentioned before that 200K tends to be kind of the gold standard of what we'd apply. But, I thought this was a really great resource for, how we might think about smaller businesses and how we might adjust the formula on that basis. We talked a little bit about spend versus demand potential. So again, just calling out that this is talking about actual spend in market. Beware the temptation to gerrymander your market. So this goes back to why are we actually doing the market sizing? And again, Jim's comment about, product people need a very specific view, that's a narrower view. But, I always pull this out to say, well, don't leave certain vendors out because it skews numbers in ways that are uncomfortable to you or that you feel will send the wrong narrative, right? We want this to be useful to us, and therefore we should have a very honest view of what we think the market is. So blending in comparative approaches, I mentioned that before, just in terms of how you get around growth rates and estimate what a particular business unit size is. Say again at Adobe, adjust for heavy businesses. So some of the competitors we used to track, we knew they were generating somewhere around 40% in services revenue. So that was certainly something that we wanted to account for. And then lastly, as we always say, remember the problem you're trying to solve with this. So I think that's it of me talking at you. I'll open the chat here so that I can see what some of the questions are. But Jason, let's.
So yeah,
I can jump in with a dumb one. I think I texted it already, Dave. But a slide or two back when you had the formula up, that 200K in the middle, you said revenue per employee. Was that a static number that you've kind of baked into your formula, or is that based on? Yeah, thank you, Dave. Whoever did that. Is that based on company details? I apologize, I was missing that.
200K is a static, right? It's no matter, again, that other chart that I showed where you could, mess with the formula and tweak it if you're dealing with smaller companies, assuming they're not as efficient and cooking with gas quite yet. But yeah.
Yeah, that's kind of where my reaction came, and I've worked across the spectrum, right? Huge enterprise companies, that number totally makes sense, and then it's a smaller company. It's just like, do we even have revenue?
Yeah.
I'm not really sure.
It's free revenue, right? Yeah, for sure.
Yep. Couple of
Thank you.
Yep. A couple of questions that came up. First of all, one that was private message to me asking about getting a copy of the slides. You can get a copy of the slides. Product Coffee Premium members, they will be in the archive later today. You'll be able to just go in and log in and download them. And if you'd still like a copy of the slides and you're here today and not a premium member, you can just shoot us a note and we'll send them over to you. They'll be posted to the public in about 3 months, but if you're here today and you want them today, just send a note over to info@productcoffee.com and we'll send them to you. The other thing is, Eric Winter, you had a question about Forrester and Gartner. Why don't you jump up here and talk about that for a second?
Yeah, so I've tried to use Gartner and Forrester in the past. They're pretty expensive. So just curious if you have any hacks to get the info free or cheap.
Yeah.
Really find you're competitive.
We were definitely embarrassed with riches when it came to that at IBM, right? We had subscriptions to everything. But the current hack that I would recommend is, every vendor who makes it onto a Magic Quadrant is always very enthusiastic about talking about it, right? And there's two things you can do. One is, if you don't want to deal with the paywall and give them your details to get the full report, you can still go to Google Images searches and at least see what an image of that Magic Quadrant is. And that will at least give you the list of the 10 to 12 or 15, whatever vendors that Gartner believes are the players in that market. So it gives us a starting point from that. But again, if you are okay with giving away your details, and then you can download the full report, and you'll get a little bit more detail in there, because typically in the waves in the Magic Quadrants, the analyst will write up a little bit about the competitor. You'll get a sense for what they feel are their strengths and weaknesses. Sometimes you even get an indication on growth rates. And so, but yeah, that's exactly how we've approached it when we didn't have subscriptions. Other ideas from folks on that one?
Thank you.
Yeah, you bet.
Yeah, I just put something in the chat, but I found some of the consulting firms like a Deloitte advisory board in the healthcare industry, and a couple of those often have some free white papers and articles that you could pull down. And then also there's another one called 8AITE. Sometimes they'll have some abstracts and other articles.
Great.
And I've just had tremendous luck with finding the market participant who is mentioned prominently in a report buying publishing rights, especially on the Magic Quadrants and the landscapes and the marketscapes and things like that. Tremendous amount of luck. Those are pretty easy to get. Some of the deeper analyst reports, they go deeper into an industry. Sales teams use them to make themselves look good, and you can track them down by sometimes just by searching for the report and looking at some of the industry players.
Yeah, I'd also add too, Gartner, you kind of have to take it for what it is, which they're always going to give you a very CIO perspective. So if you're looking for more of like a business owner, business user perspective, just keep that in mind, because they're going to be very CIO centric with their Magic Quadrants.
Jason, looks like John has his hand raised.
Yep.
John?
Come on in, John.
Yeah, so Dave, this is awesome stuff. And at the beginning of the broadcast here, I mentioned in my last stint as a practitioner doing portfolio management, and literally this is verbatim what we were doing to figure out which markets were our most lucrative markets. And the reason I bring this up is for product management. to connect the dots between the size of the market and your corporate revenue goals, here's what a lot of companies don't do. And I figured this out in my training and consulting role is you want to grow at least as fast as the market is growing, right? So if the market's growing at 20%, if you're not growing at least 20%, you're giving up market share. So what a lot of companies didn't do was take this market sizing information and figure out, okay, if we're going to hit whatever our number is next year, is our sales force, is the productivity of our sales force equipped to hit that number? And is the marketing spend adequate to fill the top of the funnel relative to our lead to close rate? And a lot of companies don't connect the dots there, and it's pretty scientific. Nothing's an exact science. But I can remember one of my clients who was like, the market, was one of those 1% of 1 billion. He's like, we'll do 85 million, next year. And I said, how many sales reps do you have? And whatever the number was, he said, I'm like, okay, that'll get you to 40 million. And I saw this look on his face like, oh, crap. I didn't think about that. So, I think where this becomes very useful for strategy is make sure that whatever your desired growth is in your company and how that's going to drive product, that it's also connected to the sales force size and productivity and also the marketing spend. Otherwise, you're just hoping you're going to hit the number and it's not going to work.
We're going to go viral, right, John? And it's just money just going to just drop from the sky.
Exactly.
Yeah, absolutely. We certainly talk about that as well with our situation at Hearsay, right? Is do we have the numbers to actually go and get this business? And so that's certainly part of it.
I was going to say 100%, John. I think that one of the issues is definitely that most companies neglect the fact that when you read a market report, it says, yes, there's a huge double-digit growth rate projected for the next 5 years in this particular vertical that we want to play in. They forget that if they are behind everybody else, and they're a smaller company that has very little to no brand awareness. Brand loyalty is huge, and usually that means that acquisition costs of new customers are much higher than trying to retain customers that are already on board. And often they underinvest in their marketing. And also it starts with underinvesting in the number of leads that they will need to drive a smaller fraction of conversions than what when they too optimistic, they'll say, oh yeah, we'll capture 20% of these new leads. And usually it's less than 1%. So those are all the different ways that often the errors are in the way that you design your marketing and sales funnel. Once you understand the competitive landscape and your position compared to other players in the market.
This is great. Yeah, good comments, Hector. Jason, there was a question from Mark that I can get us started.
I missed it. Yep, go right ahead. I missed it.
Yeah, this is a really good one, right? So Mark writes, my industry tends to be somewhat niched with vendors mixing and matching their solutions. This makes market share very difficult to find. Any suggestions? And so there are two things that I've had to wrestle with on this one. One, currently at Hearsay, we have a social media product, a texting product, a website development product, an automation product that are, compose our portfolio, our suite, which means effectively I have 4 different competitive landscapes with a bunch of different horizontal vendors that I have to account for. And so, that makes it really tough to say, all right, well, what is our actual market opportunity? We're bringing these things together in a platform. So yeah, I mean, you could certainly approach it. One way would be to size all 4 of those markets and then determine, again, because we serve financial services exclusively, you can do some, deduction based on that. But the better example from our past, and Jason will appreciate this one, is one of the acquisitions that IBM made during our time there was Tea Leaf. And Tea Leaf as a company had a very unique solution in that it competed against vendors who were in the application performance management space, vendors who are in a session replay space, and vendors that were in a customer analytics space. And so having to go through and figure out what we thought the market opportunity there was really more an exercise of saying, all right, well, Tea Leaf actually what they're doing is competing for budget. There's a certain amount of budget that companies are allocating for those things, and that's what we're really up against, right? So it followed kind of a similar approach that I mentioned before, Mark, just in terms of sizing each of those individual markets, but then offering some sort of fractional allocation against each of those to say, well, this is the portion where we're competing. And it's not an exact science, obviously, but it does help you with some directional insights. So that's kind of how I approached it. Would love to hear what others have, if they found themselves in this situation and how they've thought about that or approached it.
Jim has been talking about this in the chat as well. Slightly different angle. So if there's not a direct response on that one, I would love Jim Lee to come up and talk a little bit about some of the stuff that he's done in the past.
I think I like the adding the number of employees as a factor. I think when I've looked at it, I haven't done that in the past. And I think typically when you're looking at markets, you're looking at markets compared to other markets, and you're comparing the attractiveness and should we go after this market versus that market. But I think what that does, it adds a level of what's the effort to get into that market. So maybe if in a market there's 5 or 6 competitors and they all take a high number of employees to get that market share, versus you have a mix of some competitors that don't take that number of employees, then maybe you have a gap to say, okay, this is where this market's really attractive. And you can see because the number of employees. So I just like that basis to add in that factor. And the other thing I would often look at is what's the compound annual growth of this market versus another market to see what's growing, because a lot of times you can't honestly just tell just from the numbers. The trends are equally as important when you're looking at different markets to attack.
Yeah, the CAGR, or that compound annual growth rate, was something that we would use as well. Again, we're going to go through a lot of work to build the initial view on this. We want to be able to maintain that and persist it, and not have to do the exercise over and over again. So we would then take the time right then and there to say, all right, well, what's the CAGR, so that we can project this out for the next several years on what we think the market's going to do. Right. So everything that I covered earlier is really a snapshot of today, but it's just as valuable to be able to try and forecast out a little bit about where you think it's going to go.
Did you ever go back, Dave, and maybe look 1 year later and say, okay, we assessed the market like this. How close were we to actuals, or was it often a one time?
No, we would, at least for probably 3 or 4 again, because the breadth of the IBM Marketing Cloud was such that, there were some enduring markets that we cared about. So we would definitely go back and vet and see what we would need to update. Particularly when you consider a competitor of ours at the time, like Adobe, we were continually vetting the model with each quarterly earnings call, right? So we was like, this is what we thought the size of this was, in terms of growth, how we think they're growing. And so, looking at those filings, we could go back and confirm or tweak what we needed to based on that. So sometimes it was on a quarterly basis that we were re-reviewing this, but certainly on an annual basis.
Thank you.
Yeah, thanks, Jim. That's a great perspective too. Just for those who are asking for the deck, if you're here on the Zoom call, I have dropped a link into the chat, and you can grab a copy of Dave's deck, and it will be out on the archive later today. So if you don't grab it, it'll be fine.
And then Jason, I will post that link to that table I shared where the table itself, I think, is quite money, but the article itself behind it is even better. And effectively, the author is saying that revenue per employee is the only metric that matters, right? It's the best and only one we should pay attention to when trying to understand value. So good stuff for you guys to check out at your leisure, but thought I'd share that.
Awesome. Thanks for sharing that. Any other questions for David? All right, so yeah, that revenue, one of the things, Dave, we had a conversation about this when we were looking at some larger industries outside of software technology and some other spaces, and there's some places that that you've identified that using that revenue per employee, at least this number matrix that you have doesn't necessarily apply. Do you have any common characteristics where this approach won't apply for you as well?
Yeah, I mean, certainly when we get out of software and technology, all bets are off. Now we're talking about operational efficiency and what your supply chain looks like. But honestly, it's very much focused on software, and in support of not only understanding what the total opportunity is in play, but what we think we can do to impact that, and how we can make smart investment decisions based on where we think the market is going, what we're growing at.
I know we've got a few folks that are looking at some different spaces. I know Cortland's over at Yamaha, and I don't know if Andy's on today, if he's out there on YouTube, and of course, Jim, you've got a pretty solid background in that IoT space, which is going to be a little bit different as well. So it would be really valuable if you go back and look at the numbers in the markets that and that are kind of outside the software space. I'd be really interested to hear what you've learned and discovered along the way that might help. Does a headcount based calculation work as well in other markets, just maybe with some different numbers? Kind of curious about that. John, what you got?
So someone asked the question earlier about, what if we have a product that's in kind of a niche? And, I've run across a couple of situations like that and been able to extrapolate out a reasonably good number. If you look at how, Gartner, Forrester, and all these research firms, like the customer engagement market, if you look at how they define, for example, customer engagement, they usually break it down, and it's a bunch of categories that define that space. Pick the category that your product is closest to, and you'll get some data on that. And then try to, if you look at sort of the whole category, you can say, okay, if I look at my slice of the pie in this category, it's either growing as fast, faster, slower based on some other dynamics in your market. You can come out of that with a pretty good number to use for your own product strategy, company strategy, whatever. I found that to be pretty effective.
That's a really great call out, John. As you were talking, I thought of the example of there used to be a market that Gartner tracked called marketing resource management. And every Magic Quadrant, they were very clear on, well, what is the market resource management space? And it's digital asset management, it's project management, it's help me out, Jason. There's like 4 or 5. There's some financial planning. There's all these aspects in what makes a platform, right? And so, certainly as we're looking at some of these reports to inform what we think our market is, we should be very clear that sometimes a market has a bunch of sub segments or sub markets, and there's resources obviously out there to be able to figure out who are players in those spaces.
And the reason I bring that up is it's important for we product people to make our executives aware that the number's not as big as it seems when you break it down to our category. If you break down to our category, maybe it's bigger than it seems, whatever it is. But I think it's putting an element, as you've been talking about the whole hour here, Dave, it's putting that element of reality behind whatever number you choose to run with. And I think that's the important part here is make sure that the number reflects what's really going on relative to your business and your products.
All right. Well, once again, that brings us to the top of the hour. Thanks, John. Thank you so much, Dave, for being here and sharing this perspective. There's lots of notes over in the notes document over there. I've also dropped the link to the slides and the article that Dave shared into the notes document for you to get access to real quickly.